Good morning, and welcome to the Morning Bell. I'm Robert, joined by Lizzie and Steve. It's Friday, May 1st, 2026, and we're closing out a volatile week with some significant developments across markets. Lizzie, what are the main themes you're seeing in today's news?
Thanks, Robert. The dominant story right now is the shift in energy markets and geopolitical positioning. Oil prices fell today after reports emerged that Iran sent a response to a draft peace agreement, which is creating some relief in commodity markets. However, what's really interesting is the divergence we're seeing between political pressure and corporate action. Exxon and Chevron are defying Trump's calls to boost oil production, which tells you these companies are prioritizing capital discipline over political demands. Meanwhile, gold declined as Trump vowed to maintain pressure on Iran, so we're seeing some risk on rotation despite the underlying tensions. On the corporate side, there's an unmistakable AI theme dominating flows. Cathie Wood just purchased $18 million of a beaten-down AI stock. Applied Optoelectronics soared 11% after receiving backing from Texas, and Twilio's stock is rising on what the company calls unprecedented demand for one AI function. The market is clearly sorting winners from losers in the AI space, and we're seeing significant capital rotate toward companies with proven AI revenue streams rather than just AI narratives.
That selectivity in the AI trade is notable. How are you reading the broader market's interpretation of these developments?
The market is showing a maturation process, Robert. We're past the phase where anything labelled AI gets a premium valuation. Now investors are demanding proof of concept and actual revenue generation from AI implementations. The fact that Twilio is rallying specifically on one AI function, with demonstrated demand, shows that specificity matters. Now, as for the energy situation, the market seems to be pricing in de-escalation possibilities with Iran, while simultaneously recognizing that US oil production won't surge just because there's political pressure. This creates an interesting setup where energy stocks might find support from disciplined capital allocation rather than volume growth. The Federal Reserve dynamics are also worth noting. Fed dissenters Kashkari and Hamak explained their no votes this week, saying they disagreed with hinting that the next move would be a rate cut. This internal dissent suggests the Fed isn't unified on the path forward, which keeps volatility elevated across rate-sensitive sectors.
What does this mean for traders looking at the major indices right now?
Looking at the technical picture, the S&P 500 just hit fresh all-time highs, which is significant given the mixed economic signals we're receiving. The index is showing resilience above the 5,800 level, and as long as we hold above that psychological support, the path of least resistance remains higher. However, I'd watch for any breakdown below 5,780 as that could trigger some profit-taking after this run. The Nasdaq is benefiting most from the AI selectivity trade, sitting comfortably above 18,500, with strong support around 18,300. The technology-heavy index is getting a boost from big tech earnings optimism, and that's providing a cushion even as some of the speculative AI names get repriced. The Dow is the interesting one here because it's more exposed to traditional industrials and energy names. It's holding gains around 41,200, but it's showing less conviction than the other indices. If we see continued energy sector weakness from production discipline rather than volume growth, the Dow could underperform for traders. The play right now is being selective within technology, watching the 5,780 level on the S&P as your line in the sand, and recognizing that the Dow's relative weakness might be signaling some caution is warranted, despite the headline index strength.
That's a clear roadmap for navigating current conditions. Now, let's shift to crypto markets, Lizzie. What are the latest trends you're seeing in digital assets?
Bitcoin is showing a cautiously bearish setup heading into next week. Robert, we saw Bitcoin ETFs draw $2 billion in April, which marked the highest monthly inflows this year, and BTC sealed its best monthly gain in a year. However, the momentum appears to be fading. We're seeing repeated profit-taking near the $77,000 resistance level, and spot ETF outflows just topped $490 million, which suggests the rally might be losing steam. The technical picture shows Bitcoin trapped between $72,000 and $77,000, with $75,000 emerging as a critical support level. What's concerning is that analysts are saying the April rally was futures-driven rather than spot-driven, which questions its sustainability. The derivatives market is showing a 46-day funding rate drain, suggesting over-leveraged positions that could unwind. Institutional activity is mixed because while we're seeing ETF inflows, the actual trading behavior shows downside hedging. For next week, I'd expect Bitcoin to test that $75,000 support, and if it breaks, we could see a move back towards $72,000. The $80,000 level remains elusive resistance that bulls just can't seem to conquer. Ethereum presents a more optimistic picture with analysts targeting $3,000 for May. We just saw Tom Lee's Bitmine stake $508 million worth of ETH, bringing their holdings above 5 million ETH, which is a strong institutional endorsement. SBI Holdings is adding ETH rewards to Visa card offerings, showing mainstream adoption is progressing. The setup for Ethereum looks bullish neutral with a target range of $3,000 to $3,200 if momentum builds. That $3,000 psychological level is the key resistance to watch. However, there are some warning signs from exchange data that we need to monitor regarding rebound sustainability. Solana is actually showing the most favorable setup of the three major cryptos. The Solana ecosystem is expanding its institutional presence with a Europe-focused research arm, and Germany's AllUnity is expanding its EUR/AU stablecoin to the Solana network. This European expansion and stablecoin integration is driving independent strength that's allowing Sol to outperform both Bitcoin and Ethereum in the current environment. For traders, the strategy depends on your risk tolerance. Conservative investors should wait for Bitcoin to either break clearly below 75,000 or above 78,000 before taking directional positions. Ethereum offers a better risk reward for accumulation on dips, toward $2,800 with that $3,000 target in sight. Solana presents the most favorable opportunity among the three given its institutional development trajectory and relative strength. The key macro factors to monitor are institutional flow data from ETFs, derivatives market funding rates, and any regulatory developments, particularly the ongoing Tether scrutiny. Overall, it's a mixed to slightly bearish short-term outlook with selective opportunities, particularly in Solana and potentially Ethereum, while Bitcoin faces near-term headwinds despite maintaining strong long-term fundamentals.
That's a comprehensive breakdown of the crypto landscape. Well, that's our show for today. Remember, do your own research and consult with financial advisors before making investment decisions. The markets are showing us that selectivity and discipline matter more than ever, whether you're trading equities or digital assets. If you found today's discussion valuable, please subscribe to the Morning Bell and join us again next week as we continue tracking these developing stories. I'm Robert, and on behalf of Lizzie and Steve, thanks for listening.